and gentlemen. Welcome to my topic, Easy Financial Plan for your dev company. So this topic is off topic today. My name is Jüri Sementsov, and I represent NCM, Net Communication Management, the internet agency which is located here in Salzburg, and Gesundheit. And if you come to us on Sunday and Monday then for the hackathon, so you will see where we work and what we are doing usually. So, and I'm currently employed there as a software developer, and Perl is my daily activities. And unfortunately, this is the only ones you hear today, Perl, in my topic. So, my background, is a bit wider. So I used to work in a research and development company in electronics production, software hardware development, and also for the last 4 years in the trading company. And this creating of financial plan or more business calculation, which I want to present you today, is like also my annual activities, I would say so. So let's get started. And the topic is very difficult to make abstract, so I will use some numbers, and the numbers I will use from such country like Estonia, because I used to born, to live and to work there, and I only came to Austria this year. And principally, if you know anything about Estonia, it's one of the leaders in Europe in IT sector, unfortunately only in IT sector. So, but with Austria, they like, according to Europe Union, the same basket, so innovation followers. So, if you don't know where it's located, it's somewhere there on the north of Europe. Okay, so first of all, what do we need for the company foundation? Of course, you need to investigate the market. Is there any number of employees you can hire? And of course, we need developers and at least one administrator or the manager. And then you, of course, need to search for the office space. And of course, the main is to have enough funds, especially for the beginning, for startup. And if you are ready to start your company, then in Estonia you need only a few clicks on the internet, on the state portal. And if you're like owner of the Estonian ID card, then your company is open in 5 minutes. So, first is budget or revenue. I've checked the market in Estonia, so at the moment it's about 35 euro per hour, the software development cost. And let's imagine that you have the customer who is ready to purchase from you 5,000 hours the first year and then 3,000 each other year. So you make, of course, the calculation for 3 years minimum. So and here below you can see the revenue which we are expecting to generate, and I hope you do this. And first we need to calculate the capacity. So standard in the year is 2,000 hours. So people go to the vacation, holidays, illness, sometimes military, whatever. And we will have net hours per year. It's about 1,760 hours. And for this capacity, of course, you can estimate, but in reality, my experience shows that any specialized and software developer also works about only 90%, in reality 80 to 90% for the customer. So his hours are, let's say, so effective, and 9% of his time, of course, he spends for the meetings within the company and some internal stuff. So in reality, you should estimate 1,600 hours per each software developer. With this, we can easily calculate our capacity. So for the first year, we need 3 developers, and afterwards 5 and 7, of course, if we reach our goals for each year. The cost. With the revenue, I hope it's all okay. So with the cost is divided usually for 2 main parts. One is the first one is the variable cost. The variable cost is the cost which change with the good or service you produce. It's all the time existing until you run something, run your business. I mean, not run your business, but when you produce something. Like we produce, in our case, we produce hours and we sell hours. So with every sold hours, we will have some variable cost. In our case, we will check it further, but in our case, this is a good example. This is a developer salary. The fixed cost is the opposite side. Fixed cost exists always until the company runs. So if you stop your production, the fixed cost will exist. It's, for example, like office space rent and other costs. So the variable cost, mainly the variable cost consists of two parts. It's direct material cost. In our case, it's nothing. It's just 0. And the main is direct labor cost. Why is direct? Direct cost means the cost which can be easily associated with the product itself. And our product is working hours, I've already said. So here you see this is wage and other taxes in Estonia is the social tax and employment tax additionally. So when the average brute salary for the software developer in Estonia is about 25,000 euro annually. So here we reach the first table. So in the top you can see the revenue, and then we have calculated the variable cost for each year, and revenue minus variable cost gives us a very important indicator called contribution. So contribution is the portion of the revenue which is not consumed by the variable cost and which contribute to fixed cost coverage. So in other words, to say when we have a revenue, we minus variable cost, we will have this contribution. And with each sold hour, this contribution total amount will grow. And this is very important to know if you want to calculate the break-even. When the break-even point, this is the point when you stop losing and start earning. And also you can predict, for example, if you set some objective, some turnover which you are going to reach, with the contribution you can easily calculate how many hours you need, and with this how many employees you also need to hire additionally. The fixed cost. So principally fixed cost consists of all other costs which are excluded from the variable cost, and in our case it will be indirect labor cost. Indirect labor cost, it means if you remember, we are going to hire one administrator, so he will be or she will be our indirect labor cost, because this person is not involved in the process of production, but we can't, of course, exclude him from our business. So this person will represent for us an indirect labor cost. So we have also other costs. You see our offers, rents, utilities, whatever, and also important things like credit, interest, and depreciation. So here I will give you some short overview about the costs. What do you have in direct labor cost? I told you this is administrator staff, this is salaries, management staff, and so on. Here are some, you can see some numbers. So afterwards we calculate office space, utilities, security, whatever is related to the office. And here you can see some estimations like 10 euro per square meter. If you imagine we need some 100 square meters, so you can also see that here in the top, we have this running sum. What else do we need is like IT support. We need internet, of course, telephone, hosting, cloud space, and whatever. So it gives us some additional costs. I estimate here about 1,000 euro per year. And this is like a total if we calculate all the fixed cost. Of course, the list will be much bigger if you start calculating. If you want to make marketing or whatever, it will be much bigger. But this cost is the result of our operation. That's why it's called operating fixed cost. And this is the total amount what we have at the moment. And we can go for the operating income. So in the top, you again see the revenue, variable cost. The result is contribution. And afterwards, we have here this operating fixed cost and the operating income. So this money, what we have in our pocket before, this is our earnings before taxing, before crediting, credit interest, before depreciation. Taxes, principally in Europe Union, this is common, but in Estonia also, it's like the company doesn't pay income taxes. Of course, if you are an investor, like an owner, you have to consider that one day you are withdraw dividends, then you have to pay income tax. But from the company side, it's like a zero. And value-added tax is usually, it's also is being returned, but in any case, you should consider not from the old products you purchase, you can get it back. Credits. So here you must also consider what is the cost. In reality, the amount of money which you pay back to the banks or to creditors not your cost. The cost is only interest paid. So, and of course other like agreement fees, or if you just decide not to return the credits, then penalties and so on. And before you start off with the company, you must consider what is the purpose of the credits and what's the amount you should take. And you should consider the main parameter is like a setup cost. You imagine if you run your company from the zero, from the scratch, and then the first revenue maybe you accumulate after 2-3 months. So you need to cover all the costs in the company within this time. And of course afterwards, of course if you're lucky and your customer pays you, so then it's no problem. And of course you need to calculate the investments into the assets and so on. So here we see new table, yeah. So we have added here taxes and loans. I've taken here about 50K, which you need for the startup. And of course, usually it's not enough. Okay. So here are some assets what we need to purchase. You need to create, of course, the list, and the list can be big, but this is something what you need, like personal computers, furniture, software licenses, whatever. Here is some list with some estimation. Of course, you need multiply by 2 or 3, and depreciation. So those assets which we are going to purchase are really also not our cost. The cost is the amortization. So here there are several approaches how do you calculate the amortization, but what you need to do is exactly to set up the time for which, usually it's like in our country it's 5 years, for example, we use this. And of course you need to add this to the calculation. And after we deduct depreciation from our table, so we will get finally our profit. This is what we are going to achieve. And in our case, if everything runs like it's here, then we are going to achieve 13% from the revenue. And the next years you can see also here. What else is very important is break-even analysis. So I've told already a bit something. So break-even is exactly the point when the contribution equals to the fixed cost. So if you remember, contribution is the revenue minus variable cost. So before reaching this point, you are suffering. After you reach that point, you start to earn. And if you are in the place that you are still can't reach the break-even, what should you care? First, you need to try to decrease your fixed cost. If afterwards it doesn't help, then you need to increase your contribution. And this you can do in two ways. One is try to increase, of course, the selling price per unit. In our case, this is our. If you can do this, is perfect. If you can't do this, of course, you need to check if you can decrease the variable cost. But usually, when you decrease variable cost, it means you suffer in quality. So with this formula, we can calculate the break-even. So it's fixed cost divided by contribution margin. And in our case, if we see the fixed cost, here is the 53,000 and the contribution margin, it's 43%. So our break-even is 123K. So when you reach this amount, this turnover, then you start to earn. And also it can be converted to the hours. You need to make within the first year 3,500 hours. That's all. Thank you very much. Any questions?